Okay, everybody, here we go. Let me relax a moment. I'm kind of like really mellow right now. Why? I don't know. Just because I am. Anyway, post market wrap up on this Tuesday, December 19th, 2023. Well, let's see. Another day and another record high for the market. Imagine my shock. Imagine your shock. No, no. You and I have been so far ahead of the curve on this. It's unbelievable. It really is. But what else did you expect? That's all we do, you and me, right? We participate, we study this freak show. We know what our enemies want from us, and we're not going to give it to them. That's a fact. We have a lot to talk about today. I've been doing like a little series here, in case you haven't noticed, with regard to what we can expect in 2024. I've talked about metals and commodities and the market and all this stuff. And today I want to cover commercial real estate, something that you and I have been talking about for a while here. It's insane in my view how you don't hear anything. The silence is deafening from the mainstream media, because you see what we have here with regard to commercial real estate is another time bomb that is pretty freaking ugly. But you and I are going to pay for it all, and we'll talk more about that moving forward here. So anyway, let's just start off with this market. Yeah, another record high for the stock market. 10-year yield 3.93. Very soon, in case you maybe need to know, and I think you do, we're going to get a 3.8 handle on that 10-year yield. That's all that's going to do is open that doorway wider. The lower the 10-year yield goes, and the dollar on a relative strength basis, or the Dixie today, like 102, we're going below that as well. So the lower the dollar goes here, the relative strength of the dollar, and you're going to see this fall. Thank you, Ken. And the 10-year yield, the wider the opening is going to get for cash to make its way right into the stock market. So record high, record high, record high. I mean, we're going to get a pullback. When? Don't know. We should have had a drop before this big run up, but we don't get that anymore. We have a market that is so drunk on easy money, or the promise of easy money. And with regard to easy money, I mean, people, I can't say this another way. Wait, just wait. Magic Mika will tell you, Scott will tell you, Lava's going to tell you. It's just going to be oceans of easy money being pumped into this market. Obviously, it's massively inflationary. Every manner of whatever you can dream about. For example, this naval blockade that we are now participating in with regard to the Red Sea and the Houthis. Oh yeah, this is going to be. Could you only imagine how much that's going to cost? It's all part of the same mechanism. Pull cash into the now. Let's go float a whole, Navy carrier task group or two over there. Some destroyers, some submarines. Oh, it's not for free? Oh, absolutely not. So it's all part of the same mechanism, and a false flag. This entire thing, starting from Ukraine to Israel, is all a false flag, a mechanism to pull cash into the now on an unprecedented scale. Anyway, it's all part of it. This is all part of how this is going to unfold moving forward. More debt, again, on a scale that people aren't going to believe. And all that's going to do is, of course, prop up the stock market. That's just look. That's where we're going to go. And even with, and I'm going to show you a nice chart in just a moment. All right, let's talk about. Let me just finish with this market first before I go off on another tangent. So again, record highs for the market. 10-year yield 3.93. I told you expect an 8 handle on that. 3.8, no doubt. Dollar weaker. I told you about the relative strength. Forget about it. Central banks are killing their own currencies. It's going to accelerate in 24. That means more inflation. Or they're going to tell you that that's not the case, of course. Crypto's under some pressure today, but still doing pretty well. I'm waiting for the big drop. I mean, we need to get back here with crypto as well. Let's be honest. Are we going to get it? I don't know. I do expect this thing to get more volatile moving forward. But as I said, maybe even the video this morning, I think, look, it's going much higher in the longer run. Gold and silver catching a nice bid. Crude oil getting bid higher as well. Gee, thank you. Raising rates was the end of easy money. Raising rates. I went over this a million times. No, raising rates was to cut off credit to small businesses, which are shuttering at their fastest pace ever. Businesses today are filing for bankruptcy at their fastest pace we've ever seen. Right, hip checker? You must be an orthopedic doctor, I guess. Anyway, it's out of control, and the economy around the world is being squeezed to death by the enemy, and the enemy is central banks, who are the government, and our so-called representatives colluding directly with the central banks to fulfill their end game. Look, you and me, we're a means to an end for this thing, and it's all of our politicians are playing right into it, all of them. It's an astonishing thing, but that's where we're going. But anyway, let's talk about this commercial real estate thing, because moving into 24, we're going to see, in my view, there is no way that they're going to be able to hide this from the public. Okay, what am I talking about? We are going to see a lot more pressure fall on the financial sector, more specifically banks. Okay, I've been raising the red flag with regard to banks since before we watched the regional banks, a whole bunch of them close, and we're going to get a lot more of that moving forward. And a big part of this is consolidation of the system. You won't know that. But here's another one here. I want you to look at this chart. People look. FleshNet, thank you. I appreciate that. This is a chart. I want to. First of all, you see this? You can get charts like this, and I want you to start using this resource. This is right off of the Federal Reserve's website. So all this is hidden in plain sight. You see, because they think you're too stupid to go look for this stuff. It's just right in your face. So everything the Federal Reserve says, you can look it up and chart it for yourself. But what we have here is commercial real estate defaults for the last year. What do you notice? Look how this is an increasing slope. Do you see this? This is where we started a year ago. And this, my friends, is where we are now. Do you see how the slope is increasing? I'm going to show you where we're going here. You see this? That's where this line is going. It's going to go absolutely parabolic. So this is commercial real estate defaults. Now, there's a lot to this. This isn't just, there's a default. You have to understand what's connected to this. Okay. How many of you know what a credit default swap is? Okay, let me just very simply explain this to you. Let's use this as an example. Let's say some institution here or whatever has a whole bunch of bad loans. Well, there's associated swaps connected to this, meaning that if this debt doesn't get repaid, it's become someone else's problem. Now, these credit default swaps were really the backbone of why we had the meltdown of 2008, because you see, these institutions, they couldn't afford it. Now, this here, let me explain this to you as well, in case you don't know. This is a black hole. A black hole. Nobody knows how big this is. And look, with regard to this, we've already touched on this a little bit. All right. You're going to be responsible for this. They're going to find a reason to blame this on COVID. People are working from home now because they had to wear the mask, the face diapers, and they got this thing, and they want to be around each other. So, who would have foreseen that? Meanwhile, these institutions have made, it really comes down to them making bad bets, and you're going to bail it out. Understand, they're never going to lose. Of course, you're going to see consolidation of the system, as you know is happening. This is going to happen to a greater and greater amount in 24, but this is not going, in my view, especially because this is a selection cycle. There are so many of you. It's adorable. It's so cute, honestly, when those people write to me, many of you, about you believe in a system that doesn't exist anymore. Doesn't exist. Our votes don't matter anymore. Okay, maybe they did a long time ago, but if your vote counted, they wouldn't let you vote. Okay, this whole thing is a charade. It's a scam. Presidents, in my view, are chosen. They are selected, and whoever gets behind their resolute desk, whoever it might be, is someone that's going to play the game. Is going to make sure that the Federal Reserve finishes their end game, finishes their goal to be the buyer and lender of last resort. So going back to this lovely chart now, I want you to get another eyeball full of that. You see that? You see how beautiful that is? You think this is going to stop? You think by some miracle this is going to stop? Again, going deeper up a black freaking hole. And this is, I mean, it's going to be epic. I mean, where this is actually going to go. Let me ask you a question. Why is it that, I don't know, CNBC, Bloomberg, Fox Business, they'll never show you that. They'll never show you this chart because maybe it would screw with their agenda that they're trying to push on you, that everything is fine and we're beautiful and we couldn't be better off. Look, the illusion of the market right now, as you well know how powerful this is, because you and I have spoken about this forever, is going to be maintained through the selection cycle. And of course, again, this mechanism of propping up the stock market year end. Tell Greg Mannarino again, tell me, you, all of you here, somebody tell Greg Mannarino, how is it that the CEOs and the fat cats of these corporations get their year-end bonuses? What is it based on? What is the one thing that it's based on? Exactly. See, I can hear what you're thinking. It's based on year-end stock price. The Federal Reserve, in this case, managing to deliberately getting in here at their last FOMC meeting, promising more easy money for the market, promising rate cuts moving forward, read between the freaking lines. Now, all these fat cats, they're going to go out there and buy their multi-million-dollar yachts and, 15,000, 20,000 square foot homes and Ferraris and Rolls Royces. And, you're just going to get it elbow deep, shoulder deep in the gabagool. Again, the wealth has to come from somewhere. Look, the majority of this stock market is owned by the 1% and the 2%ers. That's a fact. All this is a wealth transfer mechanism. I mean, that's, a lot of you look up to President Trump here. Okay. What did the man just say last week? Oh, when he found out that the stock market was at a record high, he goes, oh, that just makes the rich richer. That's what he said. Didn't say that during his tenure, but he wants you to know the truth now. Oh, imagine my shock. Oh, yeah. That's all it does. And that's all it's going to do. And of course, when the market comes down, it's going to be the 1% and 2%ers who are out first, while everyone else gets stuck holding the bag of dog poo. Can I say that? I think I can. It's always the same story. And then people walk around through time and space wondering, what happened? I was a millionaire on paper. Now I can't even pay my bills. Make it up. Make any of this stuff up, people. Make it up. Anyway, look. In my opinion, nobody is in a better spot than you and I. Okay, come on, people. It's hard to deny that you and I have been so far ahead of the curves. Have we gotten it right this entire year? No, we missed one thing. I missed one thing, and I feel bad about it. That's my year-end price of crude oil. Everything else fell right into place. I'm sorry I couldn't get a 100% record. All right, I'll try better next year instead of a 99%. But again, with regard to energy prices, where do you think this is going? If you know, let's just talk about this at its most basic level. Okay, energy, crude oil, the lifeblood of the system. It's going to get propped up. This game that OPEC has been playing, this is a game. Okay, this contango, wango tango, whatever the freak they want to call it, this pump and dump scheme, and the crude is still bottoming. I'm not going to say we're out of wango tango yet, but I can promise you they're going to prop this up. OPEC knows where they want crude oil. They want it much higher. These freaking freaks over there. All right. And it's amazing that we have these masters that we must serve. We must bow down to them. It's unbelievable, isn't it? Makes me want to vomit all over the place. Ronix446, thank you. Elon thinks that there is, oh God. Yeah, I'm sure that's true here. Andy, thank you too, man. I don't care. Either one. It doesn't matter to me. I own both of them. I own numismatics. I own bullion. I don't believe there is such thing as junk gold or junk silver. I hate when people use that term. Right, Joey Socks? Joey will tell you. I hate it. Thank you, by the way. Anyway, people, look, what else can I tell? I just want you to understand where we're going. And I want you to, look, I want you to just have another look at that. How many of you believe that, again, these are defaults, commercial real estate defaults. Do you think there's a miracle, an act of the Almighty is going to come and change this? Or do you expect this to get much worse moving forward? And what does that mean? You see, you're not allowed to know. You're literally not allowed to know how many banks are on the FDIC's fail list. Again, it's above your pay grade. It's above my pay grade. It's privileged information according to them. That means some people can know, but you and I, oh no. You see, that's why you have imbeciles to the highest order and beyond, and I'm specifically referring to Elizabeth Warren, who is on a crusade right now to do something about cryptocurrency, but she doesn't care what happens to your dollars. All she knows is she wants you in them. Could you imagine this, people? Could you imagine this? You can't. You can't. No one can possibly imagine this. All right, look. I've been getting in trouble lately, again, because it looks like I am not answering questions as much. People, I don't see them all. I'll be honest with you. And I don't ignore anyone. If I see your question here, I answer it. If I don't see it, I apologize. It's an impossibility for me to keep up with this stuff and the emails and stuff I get. You try being Greg Mannarino for a day. You'll see what I'm talking about. It's crazy. Easy. Anyway, what do you guys and girls want to talk about here? Get this from the Fed's website, people. The truth is always hidden in plain sight. And it's hidden right there for you right now. JEPI, what do you want to talk about? You want to talk about JEPI? Ken, I love JEPI. And JEPI, and they started buying JEPQ. All right. I told everybody this, I don't know, a week ago, 2 weeks ago, whatever. So I'm buying these things. I intend to get, look, let me explain this to everyone in case maybe I'm not being clear on this. I expect the market to go higher. As long as, want me to write that down? As long as they keep rates suppressed. I don't think we've even seen the beginning of this yet. Again, I told you right off in this video, we're going to see a 3.8 handle on the 10-year yield, 3.7, probably 3.6. It's dropping. It's going to drop, and they're going to use the market. Again, according to Jim Rickards, he used war as a negative for this market, calling on his 30 to a 50% drop in the market in 24. Won't happen. Okay. He also used the economy, a recession, which I feel we're in already. Again, we haven't had a single piece of good economic news in I don't know freaking long. Jim here is failing to discuss, and I read his reports over there. Not even a mention, not even a syllable with regard to the global debt market, what he expects to happen to it, what he expects to happen with the dollar. It's just devoid, just vanished, it's just gone. And you can't make predictions of a 30, 50, 75, whatever percent market crash, without gauging risk. Risk is the key. Anyone who's not telling you that risk is the key here. And we can gauge risk by watching the 10-year yield, by watching the dollar, by looking at the MMRI in real time. Again, free to everyone. Link in the description of this freaking video. Anyway, look, this is going to turn around. And 50% drop in the stock market, it would be lovely. It's going to be way worse than that. But not until risk starts to spike. Not until we start to see a massive, you know this, sell-off in the debt market. And we're watching it every freaking day, you and me. Every freaking day we watch this. Our Parks, right? You're watching it too. What happens when the market crashes? What do you think happens when the market crashes? Let's put that together. Okay. And I understand it's not as simple as that. So we'll kind of outline this. The stock market crash will not begin nor end in the stock market. That's just number one. Number two, which should be number one, is the real crash is going to start and end in the debt market, because the debt market is a driver. Everyone who follows this blog, right, Joey Sox, the accountant, all my friends are here. Lava, everybody knows this, okay? Everyone who follows this blog knows this, except you see the mainstream media. Look at the Dow. Look at the Dow. It's all they want you to. They don't care about nothing else except 30 companies. That's the Dow Jones Industrial Average. You and me, you see, we're way smarter than that. We're on the next level. Okay, that means we're watching action here in the debt market. I'm going to tell you this: war, an expanding war, is going to push more cash into the debt market, keep rates even. This is what the Fed's doing. The Fed is setting this up. You have to understand. The Fed is. You remember all that 3D chess stuff that people were saying, oh, Trump is playing 3D chess, which I don't even think he was playing half a D chess, but that's besides the point. The Federal Reserve plays multi-dimensional, multi-level chess with their psyops on the people here. They understand what they need to do. They need to expand war, okay, number one, to pull more borrowed dollars into the now. They need to expand war on a greater scale. This is why, again, Iran, in my view, has a target on it. This would also help crude oil. This would help the investment banks who are invested beyond their eyeballs in crude oil. But again, the market crash, going back to your question, is going to start in the debt market. Rates are going to spike. That's going to put pressure on markets around the world, which are going to sell off, and cash is just going to move. It's going to move from a risk-on situation, which we have now clearly, to a risk-off situation. Risk-off meaning it's going to go into commodities, and in my view, cryptocurrencies, also other things too, artwork, guitars, classic cars, everywhere else. That's what's going to look for places to go, but it's going to go in the most suppressed first. In my view, I mean, look, I already told you this already, people, a million freaking times. I think, honestly, we're going to get a 1-to-1 Dow gold ratio in a worst case scenario. Even in not so worst case scenario, it's going to go 2-to-1. 15-to-1 silver with regard to gold, 10-to-1 in a worst case scenario, a fear in the market. But this is why we get ourselves set up now. And we don't think about it. I saw earlier someone wrote, I think it was MJ. I don't know if you're still here. Right before I got on here, when is the big move in silver coming? The big move in silver is coming, again, when risk on turns risk off. Right now, we're just acquiring these things at insanely suppressed prices, people, in my view. Now, don't take my word for this, look. I'm just telling you how I feel. And I am a passionate guy. You know how I am with all this stuff. But whatever I say in these video blogs, okay, I want you to, and I urge you to do this, and I've been urging you to do this for years. Think about it, okay? Even things like this chart that I just showed you. What does it mean? What does this chart mean? Think about, again, this is loan default. You think this is going to get any better? What are the ramifications of that? Again, bank closures. We're going to see a lot more of this moving forward. Yeah, it's very simple to say, okay, this is going on, and this is the most likely thing that will occur because of it. That's all I do. That's all I do is I look at a situation, the current situation, try to put these little elements together and say, what is the most likely outcome? That's it. That's all I think about with regard to this entire thing that's going on around us. It's not that hard. Man, I'm getting a headache. That must be my blood pressure's high. You know what I picked up? I picked up one of these Fitbit things, actually, to measure my blood pressure. It's been pretty good. I'm not wearing it right now, but my blood pressure's okay. Doing all right. Anyway, no, I will not be throwing a party when the markets crash. No, I am, again, look, I am not a bull. I am not a bear. I am a guy that sits back and takes all this in. I think when we get the real crash in this market, it's going to be a moment in time that people aren't going to forget, but it's also going to be a means to an end, a new system. The current system is dead. It's dead and buried. And central banks know that. So what they're doing here is they're lining up all the pieces, to, so they already have a dozen and a half scapegoats they could point at as to why things aren't going so well. What about beef? Beef is a commodity as well. I think the price of all this stuff is going much, much higher eventually. I mean, honestly, I don't think there's any way out of it because they're setting this up. It's a good question. What about beef? Because again, I believe what's being set up here is a scarcity of resources. When this thing melts down eventually, first of all, you know how this works. When people even think it's going to rain too hard, they run to the store and they clean them out. Snowstorms, hurricanes, they clean them out. And this happens literally like overnight. Within a few hours. Forget about overnight. My nose is so itchy. What does that mean? Does that mean I'm getting into a fight or something? Or is that an itchy ear? I don't know. Anyway. Central banks are killing their currencies by design. Okay, this is the real reason why you've seen trillions and trillions and trillions and trillions and trillions of dollars being pushed into the system since the last meltdown. They're killing their own respective currencies because they want a new system, a trans world. And I don't mean, trans. I'm not looking to offend anyone here, but a cross-border worldwide system. Don't take my word for any of this. Go to the Bank of International Settlements website. That is their goal. That is their dream. This is the central bank of central banks that's being set up right now. A one world system. Okay, we already have it for the most part, but it's really going to kick off here. And that's another thing I think moving into 24 why we're going to see more armed conflict. The whole BRIC situation, the Federal Reserve defending the petrodollar, they will kill, maim, slaughter millions and millions and millions of people to keep their power. The central banks of the world, they have one product, you know what it is. It's debt. The more debt they issue, the stronger they become. But the Federal Reserve is a special case because we have the reserve currency as of now. And they will defend that by murdering and slaughtering as many people as they have to. You understand? I think we're pretty much on the same page with this. All right, people, look, I think we've really covered a lot here. This is kind of a long video. You know, it's funny, MJ. I wish people would reject war, but you got a lot of people who want it. You got a lot of people who are, first of all, they're news junkies, and they're going to be sold a lot of propaganda and a lot of reasons why we need to participate in more war. It's amazing how many people don't understand that they're being propagandized and in this kind of a situation here. People, you see, people don't care about each other anymore. What do I leave you off with every Friday? Love each other, care about each other, be charitable. You think I say these things because I think it's just a nice little catchphrase? No, I say it because if we could adopt these things, we'd have a much better world. People don't reject anything anymore. People don't take to the streets for anything anymore. People don't even try to raise awareness. What do I do? And I'm not taking to the streets, but I'm sure as hell trying to raise awareness as to what's going on. Okay? At least I'm doing something. All of us here. We're all trying to do something about this here. Maybe one day we'll start a rally. We'll go march before some Federal Reserve building. That might be interesting. Anyway, look, they'll mow us down. They'll mow us down. They're so far ahead of us on all this, but we got we know what they're doing. We know what they're doing, and we know what they want. Anyway, people, that's kind of it. All right, we are going to part ways just for a few hours because I'll see you in the morning. All right. I love all of you from the heart. Thank you for your support. Thank you for everything. And those thumbs up. Wow. Look at that, Lava. And Mika. Look at these, Magic Mika. Scott. Oh, Joey. We're getting there. Those thumbs up, people, they are so valuable. They allow the video to be shown. And I'm counting on you to get it out there. All right. So, again, I'll see you in the morning. I'll miss all of you. That's a fact. And, well, that's all.